Hey, welcome back everyone. So we're going to be taking a look at Teladoc stock. Let's see what happened with them as they tanked in the after hours. Now, real quick, for anyone who has not seen it, I kind of did a stock analysis on Teladoc. I even ran a DCF model on them, but there was sort of a contingency that I attached. First of all, of course, they had a revenue for 2021. And they did have a free cash flow for 2021. It was like roughly 130 million. And of course, the revenue was somewhere close to like 2 billion. So I was able to run a rough DCF model, even though you want to see more consistency from a company when it comes to running a DCF model. And I even said at the end of that video, I would not be a buyer of Teledoc, but rather I would start to keep my eyes on them to see if they could perhaps carve a path to profitability in time, lower that negative EPS, and maybe continue that positive free cash flow and get it to be even better. Well, that just isn't happening so far, which is why we say on these unprofitable companies that you haven't seen a lot of consistency from yet, that we need to wait to see the consistency, see that good things continue to happen. And it all starts for me with the free cash flow. As I said, once the next quarter came out, I wanted to see how the free cash flow looked. Okay, now join me on the screen here, and do remember for reference that free cash flow for 2021 in its entirety was 130 million. We get a free cash flow by doing operating cash flow, which we have here, minus your capital expenditure. And that would be 32 million minus 31 million. So that leaves 1 million in free cash flow. So just based off this quarter, we know that consistency did not keep. You can already throw my DCF my hypothetical DCF that I ran right out the window, because there's no way they'd even be on target to meet or match, and certainly not exceed the 130 million in free cash flow of 2021 when your first quarter 2022 is only a stinking 1 million. So again, as I said at the end of that video that I had done before when I ran a little hypothetical DCF model on Teledoc, it came with the contingency that we need to see what happens in future quarters, the next couple quarters. It is already proven you can throw that DCF out the window. 1 million in free cash flow for the first quarter. That's now, before I do a dive into the financials, as I do want to do that, we'll just kind of take a look at an article I found here on them. Teledoc in the after hours tumbles 38% after big first quarter loss. Is it just a pandemic play? I don't know. Honestly, it might be, because, to be honest, you're starting to see the revenue, and we'll get into that when I go through the financials with you guys, but you're starting to see the revenue slow. According to the full year guidance for 2022 that they updated, which, again, we will get into that in a moment. But I just want to make the point. You're starting to see that growth that you got from the pandemic slow. And as that growth kind of slows a little, and margins aren't getting better, in fact, they're getting a little worse, and you're not getting any closer, even with revenue still increasing, even though the increases are slowing, you're not getting any closer to profitability. You're getting further away. When does this stabilize? There hasn't been any proof given to me yet, but let's go into some of the financials to prove what I'm saying. So I am on the investors page for their results, and the first thing we're going to look at is here they've updated their full year guidance for 2022, and the thing I'm really going to pick out of here overall is that it's revised right there from anywhere from 2.4 to 2.5 billion for the year 2022. And I got my little calculator on the phone here. If we just, real quick, we're going to go in between the two and go, 2.45 billion. So in between 2.4 and 2.5 billion. And we'll divide that by 2021's revenue of $2,033,000,000, and we get roughly 20% growth. So you're already, look, if you're talking about other companies that are much more stable, 20% growth looks great. But you had such higher growth, especially during the peak of the pandemic for Teladoc. And I mean, it makes sense why the revenue growth was so much higher. Because, I mean, that's where this business model was thriving. And now you've got a revised revenue for 2022 that puts the growth at already 20%. You're starting, there were people that are like, this is 30% growth plus over the next 5 years. Now, near term, and it could certainly get worse, you have the company guiding for 2022, full year guidance, to only 20% growth. Okay, so I've scrolled down to this area here where we're able to kind of take a look at what's going on and why, despite the fact that they continue to increase revenues, that still they're having bigger than expected losses, and they are not getting any closer to profitability. They're getting further and further away. So again, just comparing Q1s here, 2021 was like 453 million revenue versus Q1's 2022 is 565 million. But guess what? You've got a cost of revenue just right here that's 187 million versus just 145.9 in 2021's Q1. You've also got advertising and marketing, 89 million here, 133.6 million here. Sales ended up costing a little bit less than previous quarter. This pretty much came out the same. This was a little less. Depreciation and amortization came out to a little more. Now, they did have a good goodwill impairment charge here, and they didn't have one in 2021's Q1. So this added quite a bit. But, I mean, to be fair, that's on them. Just for small reference, goodwill impairment charges like this basically is a write-off for the company. I could try to stumble through giving you the kind of the gist of how I understand a goodwill impairment, but I'm just going to read it straight from my phone so you kind of have a set definition so we're both on the same page. Goodwill impairment is an earnings charge that companies record on their income statements after they identify that there is a persuasive evidence that the asset associated with goodwill can no longer demonstrate financial results that were expected. So essentially what this is they made some sort of investment or, bought something, whatever it was. They had some sort of investment that did not work out at all. And they're putting it in the books as a loss they're taking so that they can use it as, a write-off or a tax write-off. And thus the goodwill impairment. Yeah, I mean, goodwill impairments are like one-time things. And I think this is why they had a bigger loss than expected because of this impairment. But I'm not going to give them a break with that because that's their fault. Whatever it is they invested in that they had to write off as a goodwill impairment, that's their fault. They clearly made a bad investment somewhere along the way, and that's on them. Hey, look, this is good. At least stock-based compensation isn't as high, so you're not being quite as diluted as before. And here's another fairly telling part of the financials, and this does not include the goodwill impairment. So again, you have a revenue of $565 million for this quarter versus previous $453 million. However, you have cost of revenue that was $187 million here, so way higher than the previous quarter. And after you add up all the cost, look at this. Their gross margin has gone down. Adjusted gross margin went down. This means that they are not getting any closer to profitability. So as you make more revenue versus your cost of revenue, all cost, then you get this gross margin, and it's gone down. This company does increase their revenue, but the costs don't stay the same or decrease. Instead, they increase along with it even more dramatically to where the loss is bigger or your gross margins are less. The only reason I'm being so harsh on this company is because a lot of people invested in this when it was hyping, and I get it, that's partially their fault, but hyping and, big time players like Kathy, I like to invest in unprofitable stocks, Woods, are heavily investing in this unprofitable company that is not carving any path to profitability. And a lot of people got burned on this stock, and it sucks. Okay, I mean, the way I see it is this is a company, this is a stock where I see the revenue, the pandemic hype is done. I mean, I honestly see the revenue starting to slow because based on their guidance, it is. So 2022 puts the guidance, basically it's saying now instead of us being at 25, 30+% revenue growth year over year, we're going to be 20%. And then who knows what happens with the following year? It could be 15%. So we have revenue that's starting to show that it's slowing, yet the cost of operation is not lowering, it's not stabilizing, it's increasing, and it's increasing more than even revenue is, to the point where your gross margins are starting to even lower a little bit. This means that we're not stabilizing, we're not carving a path to profitability. The free cash flow tapered way off for this Q1 to just 1 million. And overall, I don't see the path to profitability yet. This is a company where I said I'd start to keep my eye on it for the next couple quarters. I mean, I'm going to keep watching it, but this is not a stock I would invest in at all. And if you're not invested, I would probably not invest yet. I would just let a little more unfold, watch for a couple more quarters and see what they're able to do. But if they continue to show that, they can, kind of increase revenue, even though revenue growth is slowing, and yet this cost of increasing your revenue increases so much that your margins don't stay the same or increase. In fact, they go down, and you have no path to profitability that you're proving to investors, it's not a safe investment to me. But okay, I'm not going to go on any longer because this kind of video could go on forever and ever. Let me know your thoughts about Teledoc stock down below. Is this one you're keeping an eye on as well, just like me? Are you invested in Teledoc? I mean, I certainly am open to your thoughts down below or any counter arguments or something I may have missed. But again, thank you everyone for watching. That's all I've got for you, and I'll see you in the next one.